Welcome to this Conveyancing Matters chat, which is November-December 2022 news. Welcome to Conveyancing Matters with Lorraine and Stu. Join us for a chat about all things property. So, Stu, hello. The final Conveyancing Matters news chat of 2022 is here already.
I know. Can you believe it? The year's gone so quick, hasn't it?
I know. I do think they go more quickly as you get older, mate. I have to say.
It's cliche, but so true, isn't it?
It slightly is. But as I think we will all be sort of at the end of December, we may well just be all sort of sitting, having, engorged ourselves on, well, probably chicken and pigs in blankets and and nut roast. It seemed like a good idea just to sort of roll up November and December news. And I think there are some some important points for conveyancers to make. And remember, for those that subscribe to our YouTube channel, what Stu and I try to do when we do these chats, particularly on the news, is to talk about things, don't we, Stu, that are of particular relevance to conveyancers now. So it's not things that are going to happen.
Exactly. The day-to-day conveyancers that are working on their files, how it affects them.
Yeah. So, Stu, you might want to kick off with the sanctions comments. We've obviously done a chat on sanctions, which
we have.
Put another little link to. What have the SRA been saying?
Yeah, it was the SRA's guidance on complying with sanctions, and I suppose in a nutshell, to sum it up, it's the fact that you can't. I think they use the word outsource the liability for complying with those to all these different platforms that enable you to automatically check people's ID and AML. And I think it's a really important point, isn't it, that we are kind of trying to automate everything these days, and sort of knowing your client. I haven't heard people sort of use that term KYC, and client profiling is the term that we use. I just think it's so important to sort of put a stop to fraud when you're looking at a transaction, the risk that you're going to undertake, unless you've profiled your client, which involves looking through their bank statements, talking to them, of course. Taking that initial instruction, it's impossible really to have a proper handle on whom you're dealing with. And as the SRA have said in this guidance, simply relying on electronic checks, for want of a word, is not enough.
No, absolutely. And I mean, and again, I think this is useful for CLC regulated firms as well, so not just SRA regulated firms. And if anybody's interested, it's guidance that the SRA put out on the 28th of November, if anybody wants to go and look for it. But what they also have pointed out is the differences between how firms carry out sanctions compliance and how firms carry out AML compliance, because there are differences. So just because you're ticking all the sort of AML compliance boxes, that does not mean that a firm is going to be ticking the sanctions compliance boxes as well. They are subtly different. And yeah, I mean, certainly something I've sort of banged on about for quite a long time, Stu, in other training is, the LSAG guidance, the Legal Sector Affinity Group guidance on the, on the money laundering regs. They said, sort of buried in it somewhere, when they were talking about electronic ID and verification. Clearly massively excellent tools, don't get me wrong, but they sort of said, everything is susceptible to human error. You might have a bit of kit, but you've still got, if somebody doesn't put the name in properly, which is very basic and very silly sounding, but actually is still, a huge risk. And what concerns me, and certainly it seems used to more generally, is that firms might think that if they've got some sort of piece of electronic kit, which undoubtedly is helpful and provides support. Don't get me wrong, I'm not for 1 minute saying they're not worth having. They absolutely are, but they are not everything. That is not absolving the firm from responsibility to do these checks and do them properly. But certainly, if anybody's interested in the sort of sanctions and AML compliance, which people might be over Christmas when they've got nothing better to do, then having a look at that and making sure firms are going into 2023 with the right processes in place, I think would be a good idea.
I wonder, Lorraine, is it time that we almost kind of separate this part of the process on a practical level, that you now have your ID check-in and you have your AML? It's almost like, for me, they need to align this with drawing down the middle here, and we actually need to separate them. But I think too often I see, and a bugbear of mine is that, we see these sort of electronic platforms, and they actually use the term, it's ID and AML check-in, or ID and AML. And it's a bit like, well, actually, there's no AML whatsoever in there. And even people or platforms that collate bank statements, well, that's not an AML check. You're not checked anything just because you collected a bank statement. You can't, it's a weird analogy that all of a sudden I've uploaded a passport, I've uploaded some bank statements, all my checks are done. I think we almost need to get to the point now where the subject matter has become so big and such an important part of what we do that we almost need to drive a line down the middle here and say, right, we have our ID checking, which includes sanctions, it includes PEPs, merely finding that this person is who they say they are, their ID's legit, seeing them face to face, whether that be via a video call, whether it be via technology that does facial recognition and so on and so forth. That part of it's got bigger. If you go back not that long ago, we merely wanted to know that the actual passport might be legit. It wasn't that long ago that we didn't even bother. But, even probably 5 years ago, it was more a case of checking that the ID might be legit. Now we've got to link the person to the ID. We've got PEPs, we've got sanctions. There's so much to it now, even probably within the last 5 years, that it's almost become a milestone, I think, on its own.
Yeah.
Then you're going into your AML and your money. And that's another monster that we got to deal with, because it's, a client's going to be delivering money at different points of the transaction. Yeah. So you've got more than one time frame that you're looking at. And, again, another bugbear is when people say, well, haven't you done all your AML checks? Well, yeah, I've done my initial AML checks, but, I'm going to get money when I get my deposit. I'm going to get my balance of funds to complete. Well, I've still got to check where that money came from. What happens if it's sent from a bank that, wasn't the bank statements that we did our checks on right at the onset? It's an ongoing thing throughout the transaction now, isn't it? Profiling our client, you may get told something, halfway through that might affect things. So I think that the whole subject matter is too big now to almost have as one. I think AML and ID checking are almost separate. I know they obviously link, but they're just too big a subjects to talk about as a collective.
Yeah, but of course, the casual conveyancing observer standing from the outside looking in is just going to say, well, why does all this take so long, and aren't you conveyancers rubbish? Well, actually, no, why don't you all just do one? Because we have become the gatekeepers for this stuff. That's what gets on my nerves. The job has become increasingly more difficult, increasingly more risky. And frankly, the government and regulatory bodies have just continued to sort of shovel this additional work on us. And it's us that has the responsibility if it goes wrong. It's us that's putting our hands in our pockets if something goes wrong. And actually, frankly, as a profession, we've said, all right, then. That's actually also something that gets me, but I suspect that's a different chat. But
another story to say that one. But yeah.
There's a lot wrapped up in that. And actually, just to show we're slightly ahead of the curve, Stu, you mentioned, fraud. And you might remember back in the middle of November, we did a chat on another fraud when a sort of bogus estate agent was created and put on Zoopla for a property in Cambridge, and we talked about that, and the chappie that was the fraudster who was jailed for it. And I noticed, I said, we talked about that in the middle of November, and I note that one of the property industry publications is only reporting on it today in mid-December. So it's nice to know that we're still slightly ahead of the curve there, Stu. What's also vaguely interesting to me, because I know the place very well, is I don't know why Cambridge is such a hotbed for fraud, because of course one of the it might have even been a Dreambar property, but don't quote me on it. That was one of the big sort of property fraud transactions related to a Cambridge property. So I don't know what it is about Cambridge, but But on to more, more sort of newsy things. I just want to literally point out on the way by, there's always, there's initiatives, all over the place in relation to, home insulation, grants, whatever. And just really to point out, and, this won't affect conveyancers directly, I hope, but there's another home insulation grant scheme, Stu, that's been announced in the last couple of weeks. Plans to introduce, to fund loft insulation, cavity wall insulation and smart heating controls. The Eco Plus scheme, apparently it's launching in April 2023. I think the point about it for conveyancers is, firstly, watch out for changes to EPCs. And of course, if work has been done to a property since an EPC was obtained, it's going to be necessary to get another one. But also watch out for the detail in early 2023. I think conveyancers just need to look out and see if any of these grants actually attach to the property and are subject to clawback when the property is sold, or whether
that's the problem, isn't it? It's the clawback. Also your local search, you can find details of these within the local search. So it is vitally important, because obviously if you go and complete without having that covered off, you may be the one that has to repay it.
Exactly, you're the one left standing with no chair when the music stops. So conveyancers, just keep an eye out for that when the detail comes out. I mean, we'll report on it anyway, but just worth kind of, I think, pointing out in passing, really. And of course, loads of loft insulation is dodgy old loft insulation. A lot of this spray stuff that's been put. I'm sure you've read about it, Stu. You might even come across it. A lot of this spray stuff that's been put into people's roofs and roof trusses, and between the roof joists, has actually sort of solidified and actually rendered, I think, off the top of my head, something about 250,000 properties lenders won't now touch, because this stuff is actually sort of physically damaging the structure of the property because it's so heavy and difficult to get rid of. So, and it's also sort of, damaging the wood that's the physical structure of the roof. So, watch out. Anyway, Stu, moving on. A matter I think probably close to PCS's heart, the buy-to-let market. So, what next?
Well, we're not going to talk about capital gains tax and linking that to buy-to-lets, and is that going to have an effect? Is it going to slow down potentially the amount that or amount of properties that people might want to buy from an investment front? And of course, will we get a peak? So I think the budget announced, didn't they, that there were going to be changes on the allowance and the exempt amount. And from memory, was it 12,300 to 6,000?
Yeah, so absolutely. The current CGT allowance is £12,300, per tax year. That's dropping quite heavily to 6k, as you say, from April 2023, and then dropping again to 3k from April 2024. And as you say, I think there might be two consequences. Maybe there might be a sort of rush of buy-to-let landlords looking to offload properties before the allowance drops in April 2023, and maybe if the market's slowing down, Stu, maybe that little rush of transactions might be something conveyancers are quite happy with. But again, as you say, that might also lead to a broader slowdown in the buy-to-let market.
I wonder how many people get involved in capital gains tax in terms of advising clients, not obviously about tax as a general, but the fact that there is that liability.
Well, I must admit, what I've always done is, obviously, I have very clear blue water. I don't give accountancy advice. I'm not qualified to do so. But on any property where it's evident that the seller doesn't live there, I've always sort of added a two-liner in somewhere or other that says, CGT could be payable. Please ensure you take appropriate accountancy advice before exchange. And of course, 3 or 4 years ago now, the time frame for reporting and payment of CGT sort of dropped dramatically, didn't it? It's now 60 days for completion, which I think caught a lot of people out. I mean, it originally went down to 30 days, but then went back up. I have always sort of alerted, buy-to-let and investment and sort of second home type clients to the possibility, but basically have sort of said, well, go and get accountancy.
We actually pointed out at the onset. In some of our initial letters on the sale, once we've completed the drafting and we've done the initial sort of bespoke more of a common letter to our client, we kind of drop it in there, only because we find that such a large percentage aren't actually aware of it. No. It's not something that you hear massively advertised, is it? I'm not sure if a lay client would actually fully appreciate that it might be something they've got to pay.
No, I mean, theoretically, of course, they should all have accountants because they should be declaring their buy-to-let incomes too. But and I suppose the reality might be, actually looking at it the other way, that actually, the potential for capital gains tax if property prices are softening and the market's slowing down a bit. Well, actually, arguably, people that have bought property in the last 2, 3, 4 years as investments, if they decide to get rid of them, they won't have made a gain anyway. If they,
yeah, very true.
So
the big question I want to ask: why, as conveyancers, do we get involved in the stamp duty, but we're not involved in capital gains tax?
Well, of course, there's the $64,000 question. I suppose because the CGT does link to, people's income and everything else. And originally, maybe SDLT was supposed to be seen as, just a single point calculation, which theoretically just using the government's calculator, we were supposed to be able to do. But of course, with the vast number of exemptions and reliefs and God knows what else, it's just become incredibly complex.
Yeah, I think that's what it is, isn't it? You can offset a lot against it, whereas you can't with stamp duty. But I do wonder, nothing would surprise me as to what might come within our remit.
Well, you're right, yes, too. So the digital registration is with us, Stu.
It is.
Came in on the 30th of November. The only thing I wanted to point out for firms, because the Land Reg do have some really good sort of training products, the Land Reg has now changed its portal redesign. They're on version 1. I suspect they'll be careering towards version 2 pretty quickly. Post-completion teams or people dealing with post-completion work should, go and look it up if they haven't already. But to be fair,
yeah. I think most firms will probably be already well akin now, won't they, to doing everything in this manner digitally? So,
well, one would hope so. One would hope so. Well, we reported a couple of months ago, Stu, didn't we, on the stamp duty land tax threshold change? Albeit it's a little way off. So, the Chancellor did sort of kick this into the long grass to some extent. So, but the recent reduction in limits is actually, theoretically at least, only supposed to be a temporary measure until 31st of March 2025. But I just really wanted, and funnily enough, it actually chimes with your issue about sort of AML being a continuing obligation. And I think SDLT very much fits into that profile now. Checking SDLT is not a once or twice in a transaction sort of pinch point.
It isn't
at all. And once you've given your quote at the beginning, people think, well, we perhaps don't need to think about it till the end, when we're about to do the completion statement. But so the recent threshold change should really have prompted firms to look and think, well, does this impact on any SDLT, any SDLT that our clients are going to be paying now? But just I thought it was worth stepping back and looking slightly at the bigger picture for firms. Don't want to spend too long on over egg it's due, but the Chancellor did in the recent budget announce that 79 million quid had been earmarked over the next 5 years to help the revenue sort of take on more serious fraud and tax fraud issues. And clearly, I think looking into SDLT and clawing back SDLT is going to be one of those. Obviously, we've got lots of organisations out there whose raison d'etre is to try and get buyers to get their affairs looked into to claw SDLT back. Firms that have got the CQS accreditation have now got to comply with the updated CQS core practice management standards, Stu, which came into force on the 1st of May. And basically what the Law Society have done there is really increase the stamp duty land tax due diligence that you need to do throughout a file. And you have to, it has to be audited, it has to be verified. And I just think the challenge for firms, actually, whether the CQS firms or not, is actually, as a file progresses, to identify if your client's instructions change or their circumstances change, or you find out more about them, to think, well, does that impact on the SDLT transaction?
Oh, 100%. There's, even without the changes that the government make, there needs to be, I think, for any conveyancer, let alone firms, a trigger point where they actually reevaluate the stamp duty. You might find, for example, that you're going to work out stamp duty on a shared ownership and you're taking into account the rent and things like that. Well, of course, that wouldn't be made apparent at the onset when the quote was given, perhaps, and of course the duty may have changed, may it? And of course the client may not know that. And the last thing you want to do is submit your completion statement to the client for them to sort of pipe up and say, well, hang on a minute, the quote said it was this,
Yeah.
And of course it wasn't. So you've got yourself a sticky situation there.
Yeah, and of course it ties in with the firm's wider responsibilities to lenders. You know, you mustn't release the mortgage advance until you've got all the SDLT and the land registry fees that you need to complete, and so on and so forth. So I just think it's even just the sort of checking, but particularly identifying, you know, when you find out more about your client, does that impact on the SDLT payable? I think is really important. Lots of firms, of course, send a checklist at the beginning of a transaction, but I also see that lots of clients fill them in very badly. And I wonder how many firms actually review those properly and follow that up. And of course, all the stuff we're talking about here, Stu, is before we've actually lifted a finger to do any conveyancing.
Oh, of course. Well, all of this, virtually all of this, we're talking about today.
Exactly. None of this is actually relating to title checking, which is our job. And of course, the irony is that title checking is actually the bit that we were always supposed to do and we always did do. And that's one of the bits that's most commonly outsourced. So isn't that bizarre?
The irony.
Isn't that bizarre? That's the bit that actually is taken out, and other firms say, can we help you with your title checking while you do all the other crap that you've got all this responsibility for? There we go. Such is the fragmentation of the conveyancing process, Stu. I could talk about it all day. Just a tiny one, really. If you are a conveyancer or a lawyer who, you know, needs to think about ID1s and ID2s and ID3s and ID4s regularly, and you were looking in the last couple of years at Practice Guide 67A that the Land Reg introduced, which were temporary ID changes brought about as a result of COVID. Just, you know, tiny point, but Practice Guide 67A no longer exists anymore. What the Land Reg has done is sort of suck the temporary changes back into Practice Guide 67 now. So 67A doesn't exist anymore. And I just thought actually, and do look at that if you do use ID forms fairly frequently, because actually what the Land Reg has done is sort of expand and now make permanent, for example, the non-conveyancers from a number of different professions that now can verify identities, so medical doctors, police officers, all sorts of people. So, you know, do just have a look at that if you know that's of interest to you. But do
you think that's a problem?
Say again?
I think that's a problem.
Again,
expanding the amount of people that can verify ID, I'm never sure is a good thing. And, you know, we hark back, don't we, to the days where we were reliant on the post office, you know, certifying somebody's ID. And you look back now and you think, oh dear, how on earth did this come about? Because that was the most ridiculous thing ever, wasn't it? Somebody that could be, well, a certain person could go and get a job in a post office and all of a sudden they're certifying their mate's ID and stuff like that. I mean, it seems ridiculous now to think back. And I kind of feel that the prestige of, you know, completing an ID1 with our professional qualification is diluted if all of a sudden, you know, lots of other professions can't do it. I'm not maybe, you know, advocating.
It can be difficult to track those people down. I mean, at least regulated. How would you track down an individual police officer to check that they are?
Of course, of course, and look, we now get the calls from the land registry, don't we? You know, to say, was this you that completed it? You know, how's that going to work with other industries? You know, a medical profession that might be in the middle of Christ knows what. And
how can you track down? How can you verify a registrar? How could you verify a police officer? The whole point about having, you know, regulated individuals like lawyers is we can go, you know, we can find the individual if we have a mind to see who's done that. But
I wonder if that will delay the land registry, you know, and what we're going to go on to no doubt talk about in a minute.
What a segue, Stu. What a perfect segue.
I just wonder whether this is the least of their worries, bearing in mind some of the stats that have recently been released concerning the length of time that, you know, matters are taken to be concluded there.
Yeah, I know. I mean, their own stats. I mean, I don't want to go on about this, but I'm going to.
It's difficult. We don't want to hammer the land registry.
No, they're fantastic.
But it is a problem that does, I would say, heavily now affect most conveyancing practices and a lot of clients for that matter.
Yeah. So,
and with the rising interest rates, it's even worse, isn't it?
Well, the land registry's own stats: transfers of part, new leases, average 424 days. Almost all 448 days. What's that, a year and a half? New housing registrations with prior estate plan approval. So they've already seen the plans, 388 days. So a year and a bit to get your, and of course, you know, as managing client expectation, which we've talked about before, so that people understand how long these registrations are going to take is one thing. But also, and I think something I've mentioned before, Stu, so I won't bang on about it too much, but we all know that firms can apply using the application inquiry function to expedite a registration. We we understand that that includes bunging out a copy of, the contract or a mortgage offer confirming an expiry date. But of course, when people are in the vortex and panic to try and get something expedited, they must remember that that is confidential information of their clients that they're putting in the public domain by sending it to the land registry.
Yeah, very careful.
So, don't, repent at leisure sort of thing. So, demise of the fax machine might be happening early 2023.
What's a fax machine? Sorry, I've never heard of one. That's something which used to happen in the olden days, isn't it?
Yeah, well, of course, yeah, but everybody burnt their bras. Women burnt their bras in the 60s, didn't they? Clearly, I wasn't really too young for that. And everybody burnt their faxes. And then, of course, when we had all the cybercrime sort of issues, lots of people resurrected the use of faxes.
I was joking. We have 4 fax machines in our office.
Yeah.
And, it's incredible to think, I always look at those fax machines and always say, I wonder one day when they won't be there. But the way things are going, I'm not sure.
Well, just to highlight really that Ofcom have proposing changes that sort of say telecoms providers won't be required to provide fax services under the universal service obligation, which basically means that it's a set of rules, meaning that the phone service providers have to provide sort of stuff at a reasonable, affordable cost. The Ofcom is expecting to publish a statement in early 2023. So clearly all faxes won't be switched off the minute this gets introduced. But I think firms need to be alerted to it. So if you've still got a fax machine sitting in the corner of the room that's whirring away, think about it quite carefully. So Help to Buy, Stu. PCS does a reasonable amount of this. What are the changes?
It's something that I don't think is getting that much publicity. I know we've sort of recently read some reports from the Telegraph, but for me, we are in a bit of a perfect storm with the way the economy is, the downturn in work, but nobody ever mentions Help to Buy finishing as being a big player. And for me, I'm trying to think of something else that has had the same impact. Obviously, in terms of temporary, the stamp duty holiday was massive, but taking that out of the equation, you think of many other things that have had such a positive impact on the market. I'm not so sure there's been much more than Help to Buy.
No, well, that's true. And basically what the government originally said, because the time frame for making an application is now long since gone. That was the end of October. They've got to legally be completed by the 31st of March 2023. The government had originally said that the home builder must have finished the home by the 31st of December, which actually, got quite a lot of press coverage around the possibility of leaving home buyers high and dry that might, because of the developer not finishing the home. So the government has given a little bit of wriggle room, and they indicated a few days ago, the government indicated that they're not going to enforce the first long stop date of the 31st of December 2022, as long as home builders notify the government by the 20th of December 2022 that they are able to finish building the home by 31st of Jan 2023. All I'm suggesting to conveyancers is, I think you're going to be under pressure if you've got Help to Buy transactions. Review your Help to Buy files, and maybe the conveyancers should be making sure that they aren't in the firing line if there's a problem here, because we'll be the one picking up the tab, I think. And then just the last couple of points, Stu. Renting in Wales. Yeah. Big rental changes in Wales came into force on the 1st of December. My very simple point is that the Welsh and English sort of renting and conveyancing landscapes are diverging quite dramatically. And I just think if you're an English-based lawyer now, don't dabble in sale or purchase or rent of a Welsh property. Or beware, because there are more changes.
It's certainly going that way, isn't it?
It is.
Yeah, more and more differentials that are coming into the marketplace. And I think, as we go on, maybe will be a policy that you don't get involved at all.
Yeah. And last but not least, postal strikes.
Postal strikes, such a simple one, isn't it, to talk about in terms of news? But actually, one of the things that really I think is now starting to have an impact is the postal strike. And you know, for all the sort of digital platforms that we have and mediums upon which clients can deliver information to us, there's still a substantial amount that still send, you know, a signed contract or a signed transfer or whatever the case may be through the post. And of course, it's having a massive impact now, isn't it?
It is, yeah.
It's so unreliable with people striking, and it's hard to keep up with it now, isn't it?
It is.
You know, dates right up till Christmas. It's very hard to, you know, I mean, how long has this been going on for now? Months, isn't it?
Yeah, it is on and off, but you know, there's a sort of, we're in the middle of a series of postal strikes up to Christmas, probably going to go beyond. Clearly, that's led to quite a lot of people talking about electronic signatures again. And probably a really good place to end this Conveyancing Matters chat then, Stu, is just an absolutely, you know, flagrant promotion of my little book on electronic signatures for conveyancers. If you've not yet thought about it and you want to know how to absorb Practice Guide 82 into what your firm does, then a practical guide to electronic signatures in conveyancing might be the thing for you. But well, there's lots going on there, Stu, far more than I thought actually. Well, let's wish our lovely conveyancers, you know, a happy and peaceful 2023. We will be doing some more chats before the end of the year, but this is the last news one, so I hope that everyone's found that useful.
Definitely. Take care, everyone.
Take care.